Welcome to the Real Estate Ripoffs podcast. I'm Bill Gross, real estate broker in Los Angeles. And this is my series identifying large companies, institutions that are ripping off the average homeowner, prospective homeowner in America. One of the two companies that have been around, I believe, ripping us off my entire career is Freddie Mac, what I call the smaller evil twin of Fannie Mae. And most people know of them, don't know what they do, and don't realize what a tremendous negative impact they're having on our housing market. So let's get into that. What is Freddie Mac? Well, originally it was a government agency that ran amok. And then in 2008, it went to what's called receivership. And what that basically means is the court has to oversee or appoint somebody to oversee running the organizations, both of them, Fannie and Freddie. So in essence, you have these kind of government agencies slash privately owned slash court supervised organizations. And we're going to get into the details. What's Freddie Mae's stated goal? Well, if you go to the website, they say making home possible for families in a safe and sound manner. Now, in my career, since 1986 in real estate, all that Freddie Mae and Freddie Mac have accomplished is reducing the percentage of people who own a home. Housing's gotten less affordable because of them, not a coincidence. So we have these two huge government organizations with all kinds of taxpayer money blown on them, huge salaries, payoffs to politicians. I'll get into that. And their goal, I'm in business. My business is based on the results. As a real estate broker, if I don't do a good job selling a house, I get fired. At Fannie Mae and Freddie Mac, if you don't do a good job creating housing affordability, you get more subsidies, more political support, and ultimately more evil effect, more bad effect on the overall economy. And then you read Freddie Mac delivered strong financial results in the first quarter. This company is virtually bankrupt, and to get into the numbers. So the audacity that they would tout their financial results when they have a history of lying about that is ridiculous. So let's get into what is actually a conservatorship that this organization is running under. What does it mean? Well, if you look at the definition of conservatorship, it's when a court appoints somebody to manage the financial and personal affairs of an incapacitated person or a minor. Now, a minor doesn't have the ability to make their own decisions. So when parents die and leave them an inheritance, the court appoints somebody for the children. But conservatorships are typically people who are physically or mentally incapacitated. So here we have the two largest housing finance organizations in America, literally court supervised because they're incompetent. That's why they're being supervised. And if you read a little further, I had another definition that I read down below. A court-appointed arrangement where a person called a conservator manages another person's financial or personal affairs. The person needs help is called the conservatee, and the judge can only appoint a conservatee if no other less restrictive option will work, meaning normally the court doesn't want to appoint a conservatorship. It's a last resort. Here in America, we've run our housing finance agencies since 2008, 16 years, saying there's no other possible result. It's obviously ridiculous. So the whole idea that we'd have our housing run by an organization like that is bad. Well, you say, well, Bill, how bad are they? What's really the bottom line? Let's take a look at the numbers, because at the end of the day, it's based on results. Here's Freddie Mac's stock price today, selling for $1.40. Their market capitalization, what the company is worth, the stock price, the shares times the price, is $921 million. So this is a company that the market capitalization says it's worth about under $1 billion, $921 million. Now take a look at the stock price over the years. Are they a good investment? Well, no. And the only idiots really own much of this now are U.S. taxpayers. So they made a lot of money when they were able to rip off with impunity consumers, investors. Once they got caught, now the only people dumb enough to hold their stock are American taxpayers. But note this number of $921 million. That's going to become important because it turns out that they control $3.2 trillion of assets. So let's put all that into context. I ran some numbers today. Their equity is $902 million. So imagine that's their down payment. And the assets, imagine that's the house they're going to buy. That's the same as having a $10,000 down payment on a $34 million home. So imagine you go to some home in Malibu on the water, well, not an average one, I mean a huge one, or a big house up in Beverly Hills, not an average Beverly Hills house, I mean a huge one, $34 million. And you could buy it for a $10,000 down payment. That's Freddie Mac. or it's a 99.97 loan to value. So basically, you have our whoever's running the conservatorships, court supervision, the U.S. government, the Federal Housing Agency overseeing Fannie and Freddie Mac saying, yeah, that makes sense. You should be able to buy a house with less than 1% down. It's just unbelievable. And this is the organization that is setting our housing policy today. This is the organization that's telling you how you should manage your finances. But it gets worse because, like all criminals, they're never satisfied with the crime they have. They now want more. So this week, Freddie Mac, this story is, wants to get into equity loans. It's not enough they have a first mortgage, which we say is secure because it's low loan to value. Now they want to have homeowners equity and lend them on second trust deeds, which have always been the highest risk. That's why they charge higher interest rates. And you might say, well, what could be wrong with Freddie Mac lending more money? I would say, well, first off, they're not doing a very good job. They have, but notice how it's being packaged. That's the part that's really scary. You see all the usual players in the fake news real estate jumping on board. Here's Business Insider, which is just a political mouthpiece, pretending to be a business paper. The U.S. could give homeowners a $980 billion stimulus at no additional cost, says the Oracle of Wall Street. They're just going to give us $980 billion by letting Freddie Mac lend it to us. Now, remember, Freddie Mac is only worth $942 million. So this is another equivalent $10 million house you're going to let Freddie Mac buy with no new equity. Well, how can that go wrong? It's not like they've been broke all along. Here's another article encouraging this, that we should get deeper with these criminals. Financial Times, again, a very political organization posing as a news organization. The U.S. mortgage reform could unleash the next big stimulus. Freddie Mac wants to enter the secondary home equity market in a win-win for the government, Wall Street, and consumers. Now, notice there's three groups: government, Wall Street, consumers. It's a win-win. Why? Well, it's a win for government. Government agents always like more work, always like more agencies, always like more regulations. Wall Street, they've already made trillions of dollars off of Fannie Mae and Freddie Mac bankrupting them using federal tax dollars. So it's win-win, not win-win-win, because who loses? Consumers. Obviously, throwing more money, not creating more productivity, not lending money to help build more businesses, not lending money to build more houses, not lending money to build more jobs. Just lending money to Wall Street and the government is a good thing, according to these criminals. Yeah, I'm sure it's worked out really well for them in the past. Here's another story, another example of the story. And this one is, I just think, so illustrative of what's wrong with our real estate news. Here's Fortune magazine. You have to go behind their paywall. They say it can be $3 trillion. So now you have Freddie Mac. That's worth $942 million. They're going to inject, they're going to basically print money and just throw it around the economy. $3 trillion. And you have this lady. She's happy. She's some advisory group, which means she gets paid millions of dollars to tell the government what to do with your money. That's what an advisor really is, or consultant. But they're going to $3 trillion without any federal spending, just by tweaking. That's how these people talk. They think you're so asleep at the wheel. They're going to take your money. They're going to lather it all over the economy. They're going to make millions of dollars of fees, billions of dollars of assets. And all it is tweaking your tax dollars by making you take more risks. Now, how the hell has this happened? Well, this is an organization that has a history of lying and cheating, and as a result, handing us as taxpayers the bill. There was a famous report done by the basically special prosecutor, the Office of Federal Housing Enterprises, done in 2006, came out in 2008. The Freddie Mac had overstated their profits by $5 billion. Now remember, their net equity today is only $946 million. So they lied about their profits by 5 times the net worth of the company. In most businesses, people go to jail for this. In the federal government, they get promoted. They become politicians. They work for political lobbying groups, and they work for fundraising. And so now you have these organizations that are basically bankrupt. And what do they do now? Well, now they basically become tools of the federal government to keep them in power. So here's one example. Freddie Mac, rather than helping people find houses, they become a political arm of the Biden administration. Now, like them or not, the Biden administration versus potentially Trump or whoever. My point's not that they're wrong and the other one's right. I want to make the point here, though. It's not Freddie Mac's job to get into politics. It's their job to help people get into houses. That was what's on their website, remember. But here they're getting involved in reconsideration of value guidance to combat appraisal bias. This is a political movement to say the reason why houses are worth less in certain neighborhoods is because of discrimination, which is just patently false. And really doesn't work to help anybody, meaning if all of a sudden those houses in lower income went up in value tremendously, still nobody else could buy a house, less people could buy homes. And I don't think the problem in our housing market has been not enough government regulation. Look at Fannie Mae, Freddie Mac. They're running our housing industry more and more every year, and housing's less affordable. So again, rather spend time in helping people be able to buy houses, they're chasing a problem that, in my opinion, doesn't really exist. Another example of their politics is how they raise money. I lost the article, but they were found guilty of having 84 fundraisers in a 4-year period, and they continue to give donations to politicians. But the other part is the power they give politicians. In LA, they come out and they give Freddie Mac grants, it's our tax money, that politicians use for housing to get publicity to support them. And then they hire politicians or regulators' children to work in their palace. Fannie Mae and Freddie Mac both have huge palaces in Virginia and Washington, D.C., where they have thousands of employees. They have hundreds of vice presidents making $200,000 a year up salaries. And so here's an example of their pay. They get paid so much money. There's a federal law that prohibits federal employees from making more than $600,000 a year. And they found it hard to hire somebody, to hire the head criminal at Fannie Mae and Freddie Mac at that salary. That wasn't enough. They couldn't get paid enough. And so what they did was found different ways to give them bonuses and then give them 2 and 3 jobs. And so they found ways basically to pay people $3 million, $4 million to a combination of tricks. And again, these are organizations more concerned about paying salaries to violate federal law than they are about getting people into housing. And as I would say, at the end of the day, you can always tell who people are committed to based on results. And so at the end of the day, Freddie Mac and Fannie Mae, but Freddie Mac has been committed to what? They've been committed to a long arm in politics. They've been committed to generating billions, if not trillions of dollars of fees for their Wall Street friends and themselves. They've been committed to huge salaries for their employees and a huge and ever-growing staff. At the same time, American housing becomes less and less affordable, and the American dream gets harder and harder. Fannie Mae and Freddie Mac both were created to help the American dream, to help people buy houses, have been abject failures my entire career, to the point where they are literally incompetent financially, being run by conservatorship. In my mind, not only should at a minimum the two be combined into one, but they both should be spun off and taken out of the federal government's purview. What do you think? Are they helpful assets? If you like this, put a thumbs up. If you don't like it, thumbs down. Put your comments in, subscribe, like this. Send me your comments. I'm Bill Gross at Bill Gross Probate. This is the real estate ripoff, and Freddie Mac is the latest company I'm calling out for ripping off our housing system.